नमस्कार, मैं हूं शंकरनाथ और आपका स्वागत करता हूं कौन है असली इन्वेस्टर क्विज शो के इस एपिसोड में। Today's quiz show is a bit different. You won't need a 50-50, you won't need to phone a friend, and while I'll still be asking you multiple choice questions, in many cases there might not be a right or a wrong answer. But hopefully the 5 questions I have for you will help you improve your investing skills and help you organize your finances better. With that being said, let's start with question number 1. Okay, the first question is a bit mathematical and here it goes. Pawan can do a task in 6 days while Vinay takes 12 days to do the same task. In how many days can they complete the work together? Your options are 3 days, 4 days, 9 days or 18 days. If you want some time to calculate, then feel free to pause this video now. Alright, welcome back, and if you have done your numbers right, then the correct answer to this question is 4 days. Now I've asked this question to about 100 people and surprisingly the answer I hear most times is 9 days. Which brings me to the concept of system 1 and system 2 thinking, which is so important in investing. So system 1 is intuitive thinking, which happens automatically and with little effort. For example, if a cow comes in front of your car out of nowhere, then you would instinctively swerve the steering wheel and apply the brakes. And it's that same instinct that pushes many people to look at the numbers 6 and 12 and quickly assume that the average is 9 while the correct answer is actually 4. From an investing perspective, it's the same system 1 thinking which makes us buy or sell a stock or units in a mutual fund just because its NAV or the price has fallen by 2%. But what we really need to succeed in the long run is system 2 thinking. It's a much slower process requiring a lot more effort, and that's because it's logical, specific and controlled. System 2 thinking applies when we do an SIP or asset allocation, or when someone is researching a company or sector, as it is these techniques that help investors to survive the ups and downs of the markets and make a lot more money along the way. If you're interested in knowing more about system 1 and 2, then read this book by Daniel Kahneman, which I think should be in every investor's library. I hope आप क्रिकेट में रुचि रखते हैं। तो सवाल है, your team has lost 9 wickets and needs 30 runs of 30 balls to win the game. As the captain, what would be your winning advice to the 2 tailenders? आपके पास 2 ऑप्शन है. Option 1 is to take 1 run of every ball, and option 2 is to hit 1 6 every over and play out the rest of the balls. Now 75% of everyone I've asked this question to seems to prefer the 1 run per ball approach. And one can understand why. After all, the number 10 and number 11 batsmen are definitely not the most capable ones. But if we start visualizing the problem, then a very different picture starts to emerge. This image on the left might indicate a relatively easier task of scoring a run, but it also implies that whether the ball is good or if the ball is bad, the tail ender is under constant pressure to score a run of every ball. Now, if you look at the image to the right, it might tell you something totally different. Because what it tells me is that the tailenders should try to defend the good balls, but when a bad ball comes along, then they should hit it hard and try to get a 6 for it. In other words, because every ball is unlikely to have the same level of difficulty, it's better to be selective on which ones can be taken advantage of. So as I said earlier, there are no right or wrong answers here, but there is no denying that a good investor is someone who not only calculates, but also visualizes the complete picture, and that's what I want you to learn from this exercise. चलिए क्रिकेट नहीं, लेकिन आशा है कि आपको फुटबॉल की थोड़ी बहुत जानकारी होगी. So you are the manager of a Premier League club. आपको बता दूं, the Premier League is English football's top tier competition where every team plays a total of 38 matches. At the end of every match, the winning team is awarded 3 points, a draw gets the team 1 point, and of course there are 0 points for a loss. Now this club of yours is facing a small crisis with many of its players being sidelined with injuries. With what is available to you, your club can either field a team of 11 forwards or a team of 11 defenders for the upcoming football season. So if maximizing points is the main objective, which combination will you go with? A team of 11 forwards or a team of 11 defenders? Now I hope we can all agree that if a team has 11 forwards, then it is going to attack a lot and score a lot of goals. And when a team has 11 defenders, it is unlikely to concede a goal. So to see which one works best for us, we'll take these two combinations through a decision tree exercise. Now our forward lineup faces three scenarios. They can score more than the other team, which is what the manager is hoping for. They might draw some games, and on some occasions, in spite of scoring 5 goals, they can also lose a game. So all three scenarios are possible, which means our team can receive 3, 1 or 0 points from each game. And since we don't know what is the likelihood of each happening, let's assume a 1/3 probability for each scenario, which gives us a cumulative score of 1.33 points per game. Now, one would expect a team of 11 defenders to also face the same three scenarios, but if this team is not expected to concede a goal, and because there are no negative goals in football, there is zero possibility of this defensive team to lose a single point. Which means unlike the forwards who could accumulate 3, 1 or 0 points from a game, the defenders can collect only 3 or 1 points per game, which is actually a good thing and why their decision tree throws up a points expectation of 1.66 per game. So to sum up, and based on the assumptions I've taken, a team of 11 forwards would give us 50 points in 38 games, while a team of 11 defenders is likely to garner a higher number at 63 points. Now, decision trees are useful in many situations, and the world's best investors, businessmen, and politicians are known to use them almost on a daily basis. In an investing setup, a decision tree can be as simple as deciding between a fixed deposit or investing in an equity fund. In fact, the same framework can be applied in many different ways with a number of combinations and variables. So if you aren't doing it yet, then I strongly suggest you start building decision trees, which is a fantastic way of not only plotting the different scenarios, but to also determine the probabilities and payoffs so that you're more prepared when the opportunity arises. तो अगला प्रश्न इन्वेस्टिंग की दुनिया से है और ये रहा आपकी स्क्रीन पे। $1,000 invested in the Dow Jones Industrial Average in 1896 would be worth $791,000 in 2022. This number is without reinvesting dividends. The question is, if one had reinvested the dividends, then how much would the $1,000 be worth today? Your options are $5 million, $41 million, $77 million or $184 million. Okay, so I hope you have done your calculations and the correct answer is $184 million. Wow, that's a lot of money. Yes, that's a lot of money. And honestly, when I first ran the numbers, I thought I am making a mistake somewhere. But here's the fun part. As big a number this is, the annual compounding over the last 126 years comes to a rather sedate, respectable but powerful 10.08%. But the part I want you to focus on is the percentage of returns in the with or without dividend reinvestment scenario cases. So there is hardly a difference between 10.08 and 5.44 in isolation. I mean, it's just 4.5%. But over long periods of time, this can mean a lot, as we can see in this case. Now, I raise this point because of a recent experience. So a friend of mine had this confusion. Should he invest for his retirement via a PPF, a public provident fund, or should he opt for an NPS account? When I probed him for a bit, the part that was bothering him was the fact that he would be able to withdraw only a maximum of 60% of his NPS corpus when he retires, and the rest of the money has to go into buying an annuity with a life insurance company. Now, a query like this can be solved with some basic mathematics. So first up, my friend is 30 years old, which means he has a long runway of 30 years before he retires. Secondly, and this is just an assumption, but what he expects from a PPF and an NPS account is 8% and 10% respectively in terms of annual returns. So a quick calculation shows that potentially the PPF account can convert a rupee into 10 rupees 6 paise in 30 years, while the NPS investment can grow to 17 rupees 45 paise. Now let's factor in the 60-40 rule that's specific to NPS investments. So 40% of 17.45 rupees comes to 6.98 rupees, which needs to go into the purchase of an annuity. And the remaining 60% of 17.45, which comes to 10.46, is the money that can be withdrawn from the NPS account at the time of retirement. Now notice these two numbers, 10.06 and 10.47. 10.06 represents 100% of the PPF corpus, while 10.47 is 60% of the NPS corpus. Remember, my friend was leaning on the PPF because only 60% of the NPS corpus was withdrawable during retirement. But the fact is 60% of NPS turned out to be more than 100% of the PPF corpus, and this happened because of the teeny weeny 2% extra returns that the NPS was expected to provide. Of course, I must point out that actual performance can be a lot better or a lot worse, as these are just estimates. But the fact that my friend has over 30 years to go makes me very comfortable with his 10% assumption. But along with long-term investing, the hero of this story is compounding. And when an investor uses the twin elements of reasonable returns with a long period of time, then wonderful things start happening to one's wealth and their goal of attaining financial freedom. Our fifth question is a question on choice. आपकी स्क्रीन पे डिस्प्लेड हैं 4 म्यूचुअल फंड और उनके प्रीवियस 3 years के परफॉर्मेंस नंबर्स. Since you have some money to invest, which of these funds are you most likely to choose? Is it Fund A, Fund B, Fund C or Fund D? Alright, I hope you have your answers ready. In fact, I'll really appreciate if you can spend 5 minutes either now or at the end of the video to type down your answers in the comments box below. What I'm really interested is not in the answers, but your thought process of arriving at your answers. And as I have said before, there are no right or wrong answers here. So I've posed this question on mutual funds to dozens of respondents previously. And the trend generally is about 8% will pick Fund A, 17% will go for Fund B, 25% will take Fund C, and Fund D would receive the highest number of votes with 50% of the respondents opting for it. Now, it's not difficult to understand why the majority picks Fund D. After all, this fund has never seen a negative year and its performance has been rising over the years. The same rising performance can be seen with Fund C also, which has delivered spectacular results in 2021 and 2022. Honestly, I was a bit surprised that more people did not choose Fund C in spite of it giving 41% returns in 2022. But what's interesting in this entire exercise is that all these 4 funds, that is A, B, C and D, have more or less given the same 3-year cumulative return, which comes to around 9%. Now, there might be a decimal here and there, but mathematically all 4 funds have delivered the same 9% CAGR, and yet we can all see a bias in terms of fund selection. Very clearly, there is a recency bias and a progression bias when it comes to Fund C and Fund D. But the fact is, there will always be a bias, and it is the smart and successful investor who recognizes that bias and tries to control it to the extent possible. One way of doing that is to change the perspective. For example, let's take the data we were working on, but instead of giving you a percentage, let me present the same data in terms of ranks, something like this. Now, what's interesting to note here is that for the 50% people who chose Fund D, they were actually choosing a fund that had never been ranked 1 and has been ranked in the bottom half of the performance table in 2 of the last 3 years. On the other hand, Fund A and Fund C have been top rankers most of the time. Again, there is no right or wrong answer here, but my only submission is for everyone to look at a problem from multiple angles so that one can take the right money decisions along the way. And with this, क्या हुआ? कुछ नहीं, हूटर बज गया है, यानी कि देवियों और सज्जनों, आज का खेल यही समाप्त हो गया है. कुछ भी कहो, क्विज शो में मजा बहुत आता है, and I hope you have learned as much from this episode as I have in presenting it to you. So to put it together, question 1 on System 1, System 2 thinking explained how we make decisions. Question 2 was the cricket question, which was on visualization. Question 3 put together a decision tree framework using the Premier League as an example. question 4 with the PPF and NPS confusion showed how simple mathematics can cut through the noise. And finally, there was question 5, which put forth the presence of bias in investing and how investors emotionally pick a suboptimal option. If you like this presentation, then do tap on to that like button and share it with your friends over WhatsApp, Twitter, and Facebook. I surely look forward to reading your answers and comments, and I hope to meet you next week on another insightful video. Until then.